Hey everybody, this is Jim at SB500chart.com. It is July 6, 2014, Sunday afternoon, a little bit before 5 o'clock. Let me read this to you, then we'll look at the week and see where it looks like we might be headed. The website in this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, looking first at a 2-hour chart, which has a tendency to screw some of these lines up over here on the shorter time frame, so just ignore that for right now. I just remind you, we had this pattern that we were looking at that wasn't perfect, but we identified it as an inverted head and shoulders pattern. There's the depth of it right there. When we look at where we broke out, that took us to a target of about 1990. And we are currently less than 5 points away from meeting that target. Now, what's interesting, however, when we look at a 30-minute chart, is we've sort of done it in a manner that, to my eyes, at least looks a little disorganized. I mean, it's great that we're here. We knew to reasonably expect this outcome, but it's not happening it's just not happening in a real, clearly defined manner. As far as I can tell, we've got a pretty good support line down here, maybe with these last two touches, but resistance, it's a bit wishy-washy as far as where that line might really exist. Now, keep in mind, when you have bullish moves, typically the support levels are the levels that line up more neatly, and the resistance levels can run ragged. Conversely, when you have a downward bearish trend, it is typically the resistance lines that line up nicely, and the support can run ragged. Now, if we run way ahead of ourselves here and we start to take out some of these longer term trend lines, then I would start to consider that might be the result of some people piling on in this move. And that is usually a sign of a top if it happens in a bull move, or a bottom if it happens in a bear move. And I'll remind you, back when we put this bottom in, back here in 2009, all of this for about 6 months was just totally and completely, I mean, we went from about 1180 down to 666, and none of that was lining up with anything that looked appropriate as a channel back in 2007 and 2008. In other words, the bottom fell out. That was the bottom. That marked the formation of the eventual bottom. The question now is, in 2014, if we were to blow out over some of these important trend lines to the upside and do so in an uncontrolled manner, that could be the exact opposite of what we saw take place in late 2008 and 2009. As far as the week went, well, we actually kind of entered the week after seeing some significant weakness, but you'll recall that once we made this low on the 26th and started to come back up, that's when we were able to identify this potential bull flag. And that bull flag, the day after we marked it as possibly a bull flag, broke out. And ever since then, the market has been rallying. That is exactly what a bull flag should do. We also mentioned, I can't remember exactly where, but we also mentioned that that often you run into some resistance at a couple places on the way up after a breakout from a consolidation pattern, and that likely was simply one of those places. So here we end the week at 1985 and change. Our target of 1990 is just a fraction of a percent away. So I believe we can chalk that up to another chart feature that, even if we were to not make that, another chart feature that for all practical purposes has worked. I think we'll make it. But do I see any danger signs? Well, about the only thing that I would say is let's extend this short-term line on out a bit. And then, of course, we have this line right here as well. We are above this. We're above this. We could come back under this line right here, and it would not surprise me, because this was a resistance line. We broke out over resistance. That really can't be counted on in the same way as if we'd broken out over descending resistance. Right here, this was descending resistance. We broke out. It's supported. This is ascending resistance. We broke out. We came back under. We broke out. We could come back under again. This line is more important than this one. So I'm going to make this one a little bit darker blue. Now, as you know, for almost the entire week, my younger son was in the hospital. So I really did not have the time to spend on things this week that I wanted to. And we don't know exactly what this week is going to hold. He's back home, but we're having to work through some things here with him. So, with that in mind, be patient with me. Those of you who are fathers, you know where your heart is when you're dealing with serious health issues. So please be patient. Hang in there. I will try to do this video every day, just like we've done. By the way, it is also worth mentioning, in case you didn't notice here, the third was a short session. You can see that obviously the chart here has that empty space that happened late, in the afternoon. Maybe they will clean that up as we go forward. But guys, I think it was a great week. We see this inverted head and shoulders pattern within just a handful of points of reaching its minimum expected target. It's now, if we reach that, the question will become, will this give us more than just the minimum? That often happens. Let's see if we get it this time. So guys, that's going to be the video and the weekly review for the week ending, actually the week, this was the short week. So let's see what we get coming up into the regular session week that we start tomorrow. So 3.5 days this week, full 5 days the week coming up. Folks, I want to thank you for watching. Thanks for taking time out of your day. And thank you for your very kind support. Take care.